I need help with my books and taxes, but I don't know how to choose a good CPA. I spent hours online looking and found nothing. I am so frustrated. Then I thought, hey, let's make a podcast out of this.
Welcome to the Get Business Savvy podcast. I'm George Black, and I've helped lead 19 companies to over $1 billion in combined revenue.
And I'm AJ Bishop, a starting entrepreneur.
So AJ, is this your way of getting some free advice?
Yeah. But isn't that what I get to use this whole podcast for?
Well, sure. So guys, listen, we're gonna delve into this because AJ's right. It really is hard to find guidance on how to select a good or great CPA. Now, over the years, I've interviewed lots of CPAs. I've worked with a bunch. There are a few that I really, really liked, and I'll tell you why. And there's certain characteristics that make a great CPA. And I thought, let's just jump into that and share that with you all. And then there'll be something now on the internet on how to choose a great CPA. Well, we're going to begin in ancient Greece. Bet you didn't expect that.
Not at all.
Back in the 400 BCs, there's a guy named Hippocrates, and he introduced the theory of the four temperaments. And from what everyone can tell, this is really the earliest writings of someone looking at the four personality types. And I want to show you this because if you understand these temperaments, these four personality types, it's going to help you so much in figuring out who is a great CPA. So for those watching on YouTube, I've put up a grid that you can see that we're going to use to orient the four personality types or temperaments. And for those listening, let me just describe the grid real quickly. So it's an axis, four quadrants. Up at the top is direct communication, those two types. And at the bottom, those two types are indirect in communication. And then on the right side of the grid are people. So you're more people-oriented if you're in the two quadrants to the right. And you're more task-oriented if you're in the quadrants to the left. And let me just add, these are broad brush descriptions, okay? And human beings are much more complex than this, but I think this will give you a basic orientation and really, really help you in figuring out who's a great CPA for you. So in the lower left-hand quadrant is the analyzer, and this is the melancholic temperament as described by Hippocrates. And this is the quadrant that looks to the past. And so you can see with that, a great CPA is going to live in that quadrant. There's other things about that quadrant. They're great with systems and order. They're historians. They keep records. They're very organized. And you can just feel how that's a great CPA. That's what I want in a CPA as a personality type.
And I love that description you have there, works in the past. My first accounting professor I ever had, he described the difference between accounting and finances. Accounting is all looking in the past and finance is all looking in the future.
Well, let me just add a little more to what your professor told you. So that's correct. A good accountant operates in the past. A financial person, or let's just call them a chief financial officer, CFO, they're actually in the present. So they work in the present with an eye toward the future. And so if you go to the top part of the grid, the direct communicators, both of those quadrants are in the present. There's people who work in the present. So you have the doers on the left, they're going more task-oriented, and you have the communicators in the right, and they go more toward the people. This leaves the lower right-hand quadrant for the thinkers. So they're people-oriented, but they're indirect in their communication style, and they work in the future.
And George, when we're thinking about big companies, where do kind of C-suite positions land in this grid?
Yeah, that's a great question. And by the way, guys, we should just do, if this is interesting to you all, we should do a whole podcast on this. I've done videos on this a few years ago, but this is absolutely fascinating stuff. But I'm going to do this real quick. So the thinker quadrant, the future-oriented people, those are your founders, creators, the ones who come up with the initial idea. But they quickly have to go up and to the left and get the doers involved. So they're task-oriented and start making it happen. So those are your presidents, your They could be your CEOs. They could be the COO, the chief operating officer. And then to the right is the communicator. And so that's going to move between the CEO, the president, those kind of guys. Some of them are more toward the front end of the ship, toward the people, so they're communicating. Others are more about the operations. So it just sort of depends. But your C-suite's going to be in all of that. The analyzer, that's where you want your controller, the guy who's running the show, tracking everything, your data people, probably your chief technology officer is more toward the analyzer, could be a doer. But in general, you can see how it works. So the way the flow works from the company is a lot of stuff happens in the present, but you need people tracking stuff.
And so when you're looking for a CPA, you want somebody who's in that analyzer quadrant and is looking back, kind of lives in the past, if you will. Whereas those other three quadrants, they're living in the present or the future. And that's not necessarily what you need in an accountant. You need somebody who can go backwards and look at the books to tell you where you are now.
Yes, with one little adjustment there. Everyone's actually living in the present. So that's why I said they work in the past. They don't live in the past. They are actually living in the present. Okay. So just a little clarity there. So the word melancholic here means analytical and quiet. And so you find them, and they're very congenial personality. They're usually, they avoid conflict and that sort of thing. And so they're really good people to work with. They're even cute, but they're very indirect in their communication. And you'll discover this. They would rather send you stuff, email, text, that rather than talk to you on the phone. So if you're a communicator, okay, you want to talk it all out, and they just want to give it to you. So you're going to find a little frustration working with the CPA, but that's for a whole nother episode. But just to give you an idea. Now, with this orientation, thinking about the grid, let's get into the weeds on what accounting firms offer and do. And recently I came across this article in Vox magazine interviewing Caitlin Eldridge. She's an Omaha-based certified public accountant, CPA, and she's got tons of tax experience over the years. And I was absolutely fascinated by this quote. She said, I have some clients who, no matter how much I tell them, a big refund isn't worth it. Oh, I would love a CPA to find a CPA like that. Mm-hmm. That's what you're looking for, guys. You want someone who's looking out for you, and they can explain it to you, and it makes sense, and it rings true. Caitlin goes on to say, CPAs can help with adjustments or of withholding, recommendations on tax saving opportunities, amending any returns. They're also really good for state specific items. And she keeps going on. That's right. Tax. I want them to maximize my tax savings. I want them to minimize my risk of audit. I want them doing those kinds of things. But here's the problem. More and more, CPAs are trying to be all things to all people. And it's a money-driven thing. I get it. Okay. More services, more revenue. But I think it makes them distracted, and it takes them off what really makes them great. So let me tell you a story about an entrepreneur I was guiding a couple of tax seasons ago. It was right at the end of the year where we could still make adjustments to the year. And I was listening to the advice he was getting from his CPA, and his father is also like a trust attorney. So he's got really powerful and good advice. But I'm looking at the books, I'm looking at previous tax returns, I'm looking at everything, and I'm going, this isn't good. And you're going to grossly overpay on your taxes. Well, I'm going to sum up the story. We did a lot of complicated, sophisticated moves that I knew about, and would save over $30,000 in taxes. And guys, it wasn't on millions in revenue. It was on like $500,000 of revenue. This was a huge amount of money. And it took some thinking. Now, I'm not a tax advisor, but I found a really good one who we brought in. And so everything we did, we ran it in front of him, and then they did the tax return. And so this is what I'm talking about. It's hard to find. And by the way, the CPA he did had great reputation in town. Everybody loves him, all that kind of stuff. And it's like, he had the wrong corporate structure. There was just so much wrong. And by the way, the tax savings I created that year for him continued to produce tax savings for him in the coming years because we changed some fundamental structural things.
When you're talking about that $30,000, was this $30,000 in tax payments he saved or $30,000 in tax deductions?
Right. That's a great question. This is actual tax dollars he did not have to pay in. So we're talking several $100,000 in tax deductions that were just not being taken.
Were they just too risk averse to go out for these $30,000 tax savings? Or how could a CPA not see this when you could and you're not a CPA?
I think some of it does boil down to risk aversion because honestly, he just wasn't taking deductions that were totally legitimate deductions. And this is one thing I've actually noticed a trend on in the last at least 10 years, where CPAs are becoming more like IRS agents. And that's not what I want. I don't need you to be the IRS. I need you to help me maximize the legitimate legal deductions. Now, guys, let me be really honest. The way the tax law is written is designed to entrap you. There's so much gray in areas that, and so accountants are fearful, and there's a lot of fear and all this kind of stuff.
Besides the risk aversion piece of this, was there maybe another cause for why the CPA wasn't able to catch this, but you were? Could they be just, like you said earlier, were they just offering too many other services that they maybe aren't as much of a tax expert as they need to be?
So yes, I think there can actually be, for many accountants, distraction with, they've got so many other things going on and they're trying to do all these different services that, they lose focus on the individual client and their tax expertise drops. Okay. I think that's very, very valid. In the specific case I was dealing with, the specific CPA who has like 20, 30 years of experience, I'm just wondering if there wasn't just plain ignorance going on too. Or like, he's passed it off to the intern guy or something. I don't know, but I don't know that that's always the case. But listen, you've got to be on the lookout for incompetence. Okay. Don't assume just because they have the letter CPA after their name, they know what they're doing. Odds are first of all, you know more about your business than they do. And so you always have to be alert. So this is a firm, I decided to use a firm that I've actually worked with. I know the principal and I've worked with their team, and I've guided entrepreneurs with these guys. So I've got a good feel for the firm. I really like their approach. I really like their tax angle about all that kind of stuff. But on their website, they've got 27 services. Now you're wondering, how do you have, if you're a CPA, how do you have 27 services? I guarantee you this is industry wide. This is like the AICPA, which is their governing body and licensing and all that stuff, and they do all these seminars and CE credits and all this stuff. They're saying, oh, you got to add all these things and blah, blah, blah. I imagine that's what these are. A lot of these things are just added and they go, yeah, we could help with that. We could help with that. We could help with that. We're very helpful. And they're very helpful people. But I'm looking for competence. All right.
And not just competence. You're looking for expertise.
Expertise. Exactly. Good catch. So go to the bottom of the list first, where it starts with T for tax services, tax planning and preparation, sales tax services, payroll services, IRS representation, estate and trust tax preparation. Perfect. That's what I want. I want you to be experts there. I want you to know the tax law backwards and forwards. And they do, by the way. When I'm talking to them, they're knowing stuff. The young guys have to go check stuff. But the principal, this guy's been around forever. He knows this stuff. And let me tell you some of the other things. Litigation support. Okay. That's very broad. Okay. But if it comes down to tax returns, accounting, how things were done, perfect. What's interesting to me, what's not on this list is like forensic accounting. So forensic accounting is where I've got a partner or another co-owner in the business. I think they're up to something. So I bring in forensic accountants to go through just like a crime scene, and we're looking for a crime. And I think that should be on the list. If they do that, or audits, these guys don't, I think that would be very strong, because that tells me they're into the weeds on the book. They've got financial statements. Okay. Accounting, software selection, implementation. Okay. That's great. Business entity selection. From a tax standpoint, yes. From a legal standpoint, no. Business valuations. Okay, I could see that to a certain extent, but what the value they're going to give you is going to be a cost plus kind of thing. It's not that they're not into future valuations, and most valuations are based on EBITDA. Won't even get into that, and certain, multiples on top of EBITDA or cash flow or profits or something, revenue. It's all future looking is ultimately the value. So
yeah, I was just about to say business valuations, a lot of what we did in all our finance classes. We didn't do that in any of our accounting classes.
Yeah, exactly. And so then they've also got right underneath that buying and selling a business. Then they have planning, estate planning, financial planning. Guys, I'm sorry, but that's you're planning, no. And some of them I've seen where they'll do like cash flow projections and stuff like that. But the problem is it's based on what's happened. It's not based on future possibilities. And so they're cash flowing for what's already happened. Well, it's too late. It's already happened. But they're taking it into a projection. So what they're saying is what happened in the past is what's going to happen in the future. If you've ever seen a financial disclosure from a publicly traded company, it's like past results don't indicate future performance. So come on. Investment review. No, please. No. That's what you have a financial advisor for. Management advisory services. They also have business consulting. No, sorry. I'm sorry. If I'm looking for tax, accounting, that sort of thing, absolutely. You're my guy. Pension and profit sharing plans. I would probably involve my CPA in that sort of thing from a tax standpoint and a deductibility standpoint, all those kinds of things. I think that could be helpful. But I'm going to go get the plan from a guy that does those plans, okay? Then I bring in my accountant. Same thing with retirement planning, employee benefits, that sort of thing. You get the idea. They've got a few other things, computer consulting. I'm like, no. Put a computer consultants for that. The point is like, they're, bless their hearts, they're just trying real hard. Debt and financing services. I don't even know what they would be talking about on that, but I'm going to look to investors. I'm going to look to a bank. And I'm definitely going to do that with the CFO person. So hopefully you're getting an idea of all of this.
And given your breakdown of all of these services that you would or wouldn't go to a CPA for, I'm wondering, have you ever worked with a CPA on something they shouldn't have been working with you on?
Well, not directly, fortunately, but yes. So there's a entrepreneur I'm guiding, and at the end of last year, he had a lot of profit. Okay. And so this accounting firm provides financial planning, it provides all this stuff, investing, all this kind of stuff. And so the accountant had made a recommendation to him to put the money in a retirement savings fund so it would be safe and it would be secure and it would provide a nice tax deduction for him. The problem with the advice was it was terrible. Okay. It's going to lock this money up until this guy retires, and it's only going to be available to him in retirement. The thing is that, and the accountant knows what I'm about to say, the reason I'm guiding this entrepreneur is we're growing to exponential growth. And check out my webinar on that below. You'll see the link. We'll talk about it in a minute. But that's where we're headed. We need the cash to fuel the tank, to cash flow this growth, because the growth could suck all that cash up. His potential, and we're talking like, I don't know, $200,000 or $300,000, which a lot of people, that's a lot of money, right? Well, that we could see a 10x, 20, 30x return on that money in the next few years versus what the accountant was projecting was 8% a year.
There goes your risk aversion right there.
It's absolutely safe. It's risk averse. It's going to be there when you retire, unless inflation's at 10%, and then you're locked in. Oops.
Yeah. And George, this goes back to my original frustration is, why does all of this have to be so complicated? I thought there was professional services for these people to be experts at that, and I could just go to a CPA and they'd be an expert. But now there's all these layers on top of it of what I need to evaluate them for. And then also I have to be careful because they might be giving me bad advice that's actually going to handcuff my business. So what's really going on here?
Well, I like what Caitlin says in that Vox article. And this is, I would totally hire her. I really would. I need to meet her and do a little more interviewing, but just on these answers, or some of them are great. This is Caitlin. This isn't George. I have many theories. One of my theories is that the AICPA, that's the governing body, that's the American Institute of CPAs, likes to keep it complicated because it keeps us CPAs employed. There's money in taxes. And she gets into the lobbyists and government, and it's all this thing. And they create rules that are so complicated intentionally so that only certain people can figure them out to take the deduction. And then she goes, I also see a lot of people who are afraid of doing something wrong. And then she explains, look, they're not going to just come throw you in jail. And this is what I see. A lot of CPAs, they don't want to sign the return. You know why? They're lazy. This is George's opinion now, not Caitlin's. is that they don't want to take the time to represent the person. Well, what did I pay you for then? I thought I paid you to do a proper return that you would be prepared to represent. By the way, audits are going up, but still, audit risk is still pretty low. And then there's all different kinds of audits and that sort of thing. And then Caitlin says this, you have a legal right to take these deductions. It's okay to take them. That's what I was trying to explain to the entrepreneur I was guiding to tell his accountant. These are legal deductions.
The government wrote the tax code and said you can take these deductions, so take them. Or do you just want to send that $30,000 to the government out of the kindness of your heart? Well,
it's more complicated than that, AJ, to be really honest. It's not black and white. It's all shades of gray. And that's why I'm saying I needed a CPA that will maximize my deductions, which means I got to start getting familiar with my business and the kind of deductions I have and what will he allow. And I honestly, look, I want to push things. But I'm going to have an accountant who, he's willing, but he'll also keep me from going across the line,
and be willing to sign off on it.
And well, yeah, they have to be willing to do that. Now the other thing is that you can file for small businesses and stuff. You can do a lot of this on your own with powerful tax software. Now it's for business, not home use. Okay. And not free. You'll pay a couple $100, but you're going to pay a CPA a lot more. So you could get into this game a little bit to a certain point. And in fact, I think for a lot of us, it's very much a doable thing.
So to summarize how to answer my initial question, how to find a CPA in this very convoluted environment.
Right.
It starts with going back to their personality and making sure that they work in the past and that they have that analytical mindset.
Right. Start with the personality and use that as the filter. and looking at the things they do. So if they're doing future-oriented things called planning, or if they're doing present things, then you're like, yeah, that's not what I want. And but if they're good on the accounting side, if they're experts in tax, okay, and tax deductions and what works and what doesn't, and look, they do hundreds, thousands of returns every year. They go to all these classes. They're current with tax law and things like that. You can learn from them, and you need to. So that's that personality. Stay with it. Use that as your basic filter, and then just go to them and go, here's what I'm looking for, tax expertise. And then ask them questions about deductibility of certain things and how they would approach certain deductions, business deductions. What's their thinking on that? And if they are saying phrases like, well, that's a little risky and that's kind of gray. And what I really recommend to my client, okay, whoa. And there's hesitation. There's obviously, if they say, sure, yeah, we take meals. Yeah, sure. Take mileage, another good, and they have good ideas on how to come up with deductions. Like one thing you might consider is actually buying your vehicle in your business and then leasing it back from the business. And so you go like, oh, wait a minute, I hadn't thought of that. And so they're giving you ideas, like it's called tax planning. So it's like, based on, now that planning is good. If they know deductions that you could be taking because they know you're going to make some capital expenditures, make them this year, not next year. Because we think this year's taxes are going to be higher, or tax rates are going to be higher than next year's. So there's all these things, but you will get to know them. And then I would just say, go talk to about a half a dozen. And you need to get a feel for these guys and how they come across, and you're going to be able to start to tell.
And what you're trying to tell is, what you were talking about there is, you want somebody who's comfortable and knowledgeable and experienced operating within that gray area, and that they know exactly what to do when a situation arises. Where that first CPA you were illustrating, that's somebody who knows there's a gray area, and so they just decide to play it safe, rather than somebody who knows gray area, this is what we can do within this.
Yes. And I would also add to that you made me think, they give you choices. That was something that wasn't happening with this entrepreneur that I was working with, is that I'm like, that's crazy. And he goes, did he even give you a choice? He goes, no, he just says, this is the way I do it. And you're like, so no, I want you to tell me all of the options and I will pick one. And they go, well, normally, and I've got another entrepreneur I've guided in the past and currently, where like there were legitimate office expense deductions. And this guy is so risk averse that it was just driving me crazy. And so I'm like, yeah, don't even talk to me about this stuff, because these are legit deductions and he's not letting you take them. I'm out of here. I can't handle this. So we moved on. And he had to make a choice whether he was going to stay with this guy or switch accountants. And he said, it's too convenient and it's a good price, so I'm just going to stay here. I said, okay, that's fine. But at least and you're making choices, and you want someone who's going to be your partner in maximizing your business profits. And I get it. A lot of those taxes the business doesn't pay directly. They're paid through the owner. It's a flow through entity. More on that some other time. But to get that CPA, the right one, you want to have someone that's going to interact with you, have a few questions ready to go. Like stuff that you do in your business that you've done a little research on, and you go, I want to take that deduction, and then see how they push back on it. So guys, this whole conversation and many more we could be having, and probably will, if AJ keeps asking for free advice, which y'all are benefiting from, okay, is one of the reasons I'm launching the Business Savvy Guided Mastermind, because in the mastermind, we'll be able to deal with these specific issues that you're having in your company. So if you want a taste of what the mastermind's like, come to our free webinar, the Exponential Growth Webinar. You can go to getbusinesssavvy.com or just click the link below, grab a spot, and you can submit your own questions about whatever you have. We're going to answer as many as we can. Plus, take a look at this podcast on ways to increase your pricing to build your business profitability. I know you're going to love it. And in the meantime, may you live truly free.